What is a non-contingent offer? We're going to talk about that next. Hey there, it's Ryan Skaggs, and this is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates. And we're going to start with those interest rates. So before I get into the actual number, check out that link below. I'll put the average 30-year fixed right here above. But that link below is to Freddie Mac. They put out a weekly survey. So just understanding where we're at today is also really important to understand where we've been. So we have seen a recent trend where rates have slowly started to kind of steady out, where we went a trend of 8 of 10 weeks with increase in rates, and now over the last 4 weeks, we've seen them really kind of settle out. So time will tell if we continue to see that trend go up, or if maybe we have a just slight little ebb and flow when we start to go down a bit here into the next 60 days. So today we want to talk about what is a contingent offer, what is a non-contingent offer, what does that mean? And we're going to talk about it in two different ways. First of which, if you're a real estate agent out there and you're watching this, please understand that a non-contingent offer, you need to dive deeper into it. So we're going to talk about the definition of it. If you're a real estate agent, you probably already know. If you're a borrower looking to purchase, let's start from the foundation. A non-contingent offer is typically, the vocabulary word or how people would use it, is that you do not need to sell your current home to buy the next. You do not need to sell a piece of property to buy that next property. That is typically what we would look at as non-contingent. From a lender standpoint, we look at it two different ways. Is can you qualify with both homes? And do you have enough cash to close for this new transaction without selling the other? So kind of two different ways that you have to quote unquote qualify to be non-contingent. But as we start off as a real estate agent perspective, is just because it's non-contingent doesn't necessarily mean the buyer has liquid funds ready and available. I've had scenarios where a family member is going to provide a gift. All of a sudden, the family member backed out, didn't have as much money as they thought. I've had opportunities where the borrower is going to get some sort of bonus, right? They didn't have to sell a home, but they were planning on a big bonus. And all I think about is Christmas vacation here. And you go back and you got a Jelly of the Month club instead of a big fat bonus, right? So all of a sudden that changed. So non-contingent means you don't need to sell your current property. That's typically what that means when you're talking about in real estate, right? So if you're a first-time home buyer, your offer is non-contingent. You don't have anything to necessarily sell. If you already own a home and you're looking for the next, this does make you a more aggressive offer, an offer that a seller wants to see typically. But with that said, if you're an agent, you want to dive in and say, hey, is their cash to close liquid? Do they have to get a gift? Do they have to sell, stocks, bonds, borrow from retirement? What can you tell me about their down payment? Because yes, they could qualify for both properties, but sometimes borrowers just want to push and say, hey, I want to make a non-contingent offer, make it work, right? And in reality, they really don't have any anticipation of making or being non-contingent because they need the money from their current home. So just something to consider is that tip is, just to repeat again, is if you're a real estate agent and you hear non-contingent offer, you want to make sure and understand where that down payment is coming from, because they may qualify with both properties, but what does that mean? Now, if you're a buyer, and I kind of touched on this before, you have a current home, you have to consider, hey, even if I don't need to sell, what's my down payment look like for the new one? And a lot of times when I'm kind of coaching borrowers and talking to clients and saying, hey, what if we just did a low down payment option, like 5% down, and then once you sell that other home, you can put that money on the new loan and pay it down, right? So you can look at a low down payment option to be able to get into that property, and then once you sell the other one, you can get in. But you've got to understand what is that minimum down payment that you need, and of course, you've got to apply to be credit qualified. And the last thing I want to mention is when it comes to contingent, non-contingent, in the state of Illinois, we use attorneys for all real estate transaction. Consult an attorney, really understand what your liability would be and the contingent, non-contingent, and things like that. It's always smart to have that conversation and the protection. Whatever state that you may be watching this and you may be in, definitely understand the legal ramifications of contingent, non-contingent, how that works within a real estate contract. Not legal advice, just more of expectation of what the words mean, what the foundation of the term is of a contingent or non-contingent offer. Most contracts will have a checkbox and say, this is a contingent offer on the sale of 123 Main Street. Or this is a non-contingent offer, meaning you don't have to sell. So thank you so much for tuning in. Check out the other videos. I'll put links right here. Click that subscribe button, click that like button, click that bell icon to be notified as I'm putting out weekly videos on the channel. Thanks so much. Be safe, and we'll see each other again very, very soon.